Everyone thinks US 30 is just another bullish index until they get wrecked by the stop loss. In the next few minutes, I'll exactly show you how you can use smart money concepts and ICT concepts to trade in the US 30. What we have to do is we have to analyze price by using liquidity and inducement. So let's understand the psychology behind the price. So for example, now price have created this low. Because price have pushed to the upside, there are a lot of buyers over here, right? And all these buyers will place their stop loss below this low. All the liquidity is to the downside here. So how we should approach in the US 30 or any other chart? What we have to do is we have to wait for price to hit their stop losses like this, and then price should break this high. Okay, so what we have to do is we have to wait for price to induce these lows, like it should hit their stop losses or take out this low, or we can say liquidity sweep. Price should sweep this low and it should break the next high to confirm the direction. Okay, so what is this doing? Let me clear this real quick. So here we can see this is our low, this is our weak low. Okay, we have to follow weak long strong high concept. In this, what happens? Price will sweep this previous low. First price hit their stop loss over here, and now they are trying to sell here because now they are thinking it's a change of character, or maybe price is now going to the downside from here. But what actually happens? Price will hit their stop loss over here, and now we will try to enter right at this area here. Now let's understand the psychology again. Because price has swept this liquidity, so there is no more liquidity left over here, and price has now swept this liquidity, so there is no more liquidity over here. And if we understand the higher time frame, price is going to the upside, right? Price is making higher and high lows, so it's basically going to the upside, right? So here we can see by using higher time frame, right? So price have created this high, and now we have to wait for price to hit this area, and it should continue to the upside. This is our strong low, and this is our weak high. Okay, and the second thing is we have to know the structure and where we are at. Okay, for example, on higher time frame we are trading at this area. Okay, so we are over here. Let me change the color of this. So right now we are trading to the downside from here. Okay, so price have not reached this area, but we know that because price has swept the previous low, price can react from this order block to the upside. Okay, till then we know the direction is to the downside because price has swept this area. This is very important concept because price has swept this high and price is going to the downside. Okay, so we know that it will continue to the downside, right? So until and unless price does not reach our order block, we have to look for sell side. Okay, and this is the same thing we should use on US 30. This is on higher time frame like 4 hour and 1 day or 1 week. Okay, we need to understand in which area we are at. Okay, so for example, like if you are at this area, we'll try to look for sell, and if you are at this area, we'll look for buy side entry and put our target above this area. And all this happen on lower time frame. And now let's understand how to look for trades on the lower time frame. Okay, and we will use the same thing which we have used here. Okay, so let's try to understand over here only. For example, we are going to the downside. Now we have to look for inducement, like fake price should sweep previous low, previous high to confirm the direction. Now price is going to downside, right? How we will confirm the direction? Price should sweep the previous high and then it should break the low. Okay, in this case price has swept the previous high and broke the structure to the downside. Same thing which we are doing over here. Price swept the liquidity from this low and then break the high. Now on higher time frame the direction is confirmed that it's going to the upside, and on lower time frame like on 15 minutes, as we are using the lower time frame to look for trades to the downside, we are doing exactly the same thing. Now here we need to look for liquidity, like price broke the structure over here and it should create some kind of consolidation, and we have to look for this order block. Like most of the times price will create order block above this area. It's called Quasimodo pattern. Here we can see like price sweeps the previous high and broke the structure, and now it creates liquidity and probably there will be order block at this area. So we'll try to look for sell side over here, and target will be the next demand zone. Okay, and now we will look for buy side entry. It will be the same thing. We have to wait for price to take some kind of liquidity. For example, price created this high again sweeps this previous low and then breaks. So it will be a confirmation that price is now going to the upside because price has swept this low and tapped our order block. Okay, and we look for buy side entry like this extreme order block or this breaker block. And also at this breaker block we need to look for a lower time frame order block, which will be like price was going to the upside and now it reacted from, don't consider this high, just assume that price have not broken this structure. There is order block over here and price reacted from this order block. Okay, and now because there is sell side order block, price reacted from this. Because there was so much buying pressure, it broke the structure to the upside, and that's why it created order block over here. Okay, so it created order block over here. So this whole zone will be our area where we can look out for buy side entry, and stop loss will be below this low and target the next high. So this is the first one and this is the second one where you can look for entry. Now, and the third thing is we have to look for this setup where price is going to the upside, it sweeps the liquidity, breaks the structure, and again price creates trend line liquidity or maybe some kind of liquidity, and now we have this zone where we can look for entry. So for example, this is our order block, price created liquidity, we will enter at this order block, stop loss will be below this low and this will be the next target, and you can use this on any charts. So let's get now, let's see some examples on US 30, and you can use this strategy on any index or any asset. So let's start. First, what we have to understand is what is trend line liquidity. Okay, so this will be a simple explanation on trend line liquidity. So if you want to learn more about trend line liquidity, I have already made video on it. It is the first video on this channel. So let's get started. So this will be a simple explanation. So if price mitigates order block, then it creates trend line liquidity. That's how simple it is. If price mitigates any order block, then it creates a trend line liquidity. Okay, for example, there is order block over here and price mitigates this order block, then it becomes trend line liquidity. Okay, so it's very simple. Now this order block is mitigated. What is mitigation? When price touches this order block, then it goes to another direction. It's called a trend line liquidity. So what actually happens? The people who have bought over here, they will put their stop loss below this low and they will put target over here. And then what happens? The people who have put their stop loss below this low, price will hit their stop loss to the downside and then it will continue to the upside. This is where we enter on these order blocks because now the direction is confirmed and this becomes our strong low. Now this is our strong low. It will take a lot of orders to break this low. So we will enter on this area, this order block, stop loss below this low, and the next high will be our target. So let's see on real charts. So right here, we can see there are 1, 2, 3, 4, 5, 6, 7 candles over here, and price sweep the liquidity. So from 3 candles, which one took out more liquidity? Okay, so we have to mark that candle. This candle swept only one candle. This also swept only one candle, but this candle swept out 1, 2, 3, 4, 5, 6 candles. So that's why the actual liquidity sweep came from this candle. Okay, so that's why we will mark this whole candle and this will be our next point of interest. So now we can see price came and tapped at our order block, right? But as we are on daily time frame, this happened on 17th January 2024 and price mitigated this on April 2024. So if you are marking this order block and waiting for your entry, then it will take 6 months. So that's why what we have to do is we have to understand in which zone we are trading at. Okay, we know that eventually price will come at this area, right? But right now it's going to the upside. So just by taking this idea, if price has swept this previous low and now price is going to the upside, so we know the direction, it's to the upside. So what we have to do is in this leg, from this to this, I'll mark this quick. From this leg, we have to trade all the liquidity sweeps. What we have done is here we were waiting for price to sweep this liquidity and break the opposite structure. And now in the lower time frame, what we have to do is we have to wait for price to create liquidity. Then first entry we can enter at this order block, or second, after structure break, we can enter at this breaker block. So there are 2 entries possible. First one is this and second one is this, like this. And now we can continue the whole move to the upside just by catching all the liquidity sweeps. Okay, I'll show exactly what you can do over here. We have to not wait for price to come here. It will take a lot of time. So let's see on lower time frame. We'll directly go to 30 minutes. So on higher time frame, we mark that from this point we started a liquidity sweep. I'll remove this area and price flipped this zone. Okay. So what actually happened? This was some kind of order block which was already mitigated. Here we can see it's the same concept on lower time frame. So it's going to the downside. Price created a trend line liquidity over here. Price mitigated this area and it started to go down. And here we can see it's already mitigated. This zone is already mitigated. Now there is liquidity over here. Okay. The same thing we can see there is order block which is mitigated and there is a trend line liquidity. So this is a trend line liquidity. Price broke the structure to the downside. Again, price swept this previous low and it broke the opposite direction and it broke the opposite structure. Here we can consider now this is a change of character because price have not swept this low, so it took out the liquidity from the downside and broke the structure to the opposite side, and now it's continuing to the upside. So let's see, price broke the structure to the upside here and there was order block, so you can enter over here. This is the first trade. So the first target will be always the next high. Okay, because no one knows how far price can go. Here price created trend line liquidity, it sweep this, but here we don't have any imbalance. All this structure is mitigated, so this is liquidity. Here all the structure is liquidity because there is no imbalance. We need imbalance, right? Here we had imbalance above the order block, right? But there is no imbalance. Here we can see price broke the previous structure, which was this one, and swept out all the liquidity, and this whole candle took out this low, but this candle took out two candles, right? We can't use this whole candle as a POI because price directly came here. And now we have a good imbalance, which also took out 1, 2, 3 candles here. So price, you could have entered here and the next high will be your target. Second, there is imbalance. There is order block over here. As we can see, there is no liquidity sweep. Maybe there will be on lower time frame. Again, price broke the structure to the upside. Price have created all this liquidity to the downside. Again, there is order block. Mark the candle which took out more candles. Like here, this candle took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 10 candles, right? So we will mark this whole area, and you don't have to measure every time. You don't have to count every time. You just randomly use this whole area to mark. Here we can see when price tapped this order block, it didn't give any kind of liquidity sweep. So that's why price creates fake liquidity on the order block and then it sweeps and then it goes to the other direction. So that's how liquidity sweep works, right? Price directly came to this order block, and as I said, price will create liquidity and then it will sweep the liquidity and then only it goes to the upside, right? So there is imbalance. Price, there was no liquidity over here. There was liquidity, but there was also imbalance here, right? Because here we can see there was order block also. So this order block was also valid. Price took out this previous low and price hit our stop loss and then it came to the second POI. Then it swept the previous low and it broke the structure to the upside, right? Here. So price created a trend line liquidity over here. It's actually this red candle which took out 1, 2, 3, 4, 5, 6 lows, but because we are on 30 minutes, it's not showing. So I'll also show you how you can mark the perfect POIs. So price swept out this liquidity and then it reacted from this. So this is still not our entry. We'll wait for price to, because price sweep this lows, mitigate this order block, but I'll always wait for price to sweep this low and then I'll wait for structure break to the opposite direction. Price mitigated this order block and created a new high and then swept this previous low. So I'll wait for price to break this high to wait for confirmation. And then I'll enter on the next structure break, which is this one. Again, price sweep the liquidity. You can enter here. Price broke the structure. You can enter here. So there are a lot of entries. We can see this move swept out all the liquidity and then price broke the structure to the opposite direction here. And then it started to go up. So this is a confirmation that price is now going to the upside. And this is the order block. Price started to go up. So we will wait for price to break the previous high, some kind of liquidity sweep. Here we can see price sweep the liquidity and now price broke the structure to the upside. And this is our order block and price started to go up. So this will happen on every time frame on every currency. Everyone knows how to draw order blocks and liquidity, but no one explains why actually it sweeps the liquidity or what's the purpose of sweeping liquidity and why order blocks are formed, why FUG is formed. So if you want to learn more about SMC, the link is in the description or you can WhatsApp me at this number. See you in the next video.